Hey, business owners, welcome to tonight's live. My name is Lunta Di La Paulo, and I'm excited to be here with you. I'm going to be sharing with you some really amazing and exciting things that you're going to love to learn and put in motion, especially if you are looking to acquire a new marketing agency firm or any other type of business. What I'm going to share with you tonight, it's going to be applicable to anybody who's looking to acquire a firm. Okay. But because my audience is largely marketing agencies, okay, so you're going to be fortunate enough to jump with me into tonight's live so that we can cover exactly what you need to be looking at uh, around due diligence when you are looking to acquire a marketing agency. Okay, so I'm gonna go ahead and share my screen just like always. Okay, so that we can kick things off. Okay, so again, I want to welcome everybody who has just connected so that you can follow with me here to our live today. Okay, so if you have no idea what we're doing, if you received the link, the invitation from somebody, I want to welcome you. And we're going to be talking about how you perform due diligence for a marketing agency acquisition. Okay. So for those of you who are looking to acquire a firm, a marketing agency, business, this life, it's going to help you save a ton of money and avoid expensive mistakes. Okay. So just to give us a roadmap, by the way, here's my email address if you want to reach out to me. Okay, we're gonna be looking into what's due diligence. Okay, so that's we need to be on the same page, understand what you and I will be covering here, right? So we often talk about due diligence, so we really need to get sense of okay what the heck is due diligence, right? So we're gonna look into that, and then we're gonna see the importance of due diligence, right? How due diligence saves you money, how due diligence helps you avoid mistakes, right? So we're gonna look into the value of that, and we're gonna be wrapping up with the meat of today's presentation, right? How you conduct due diligence, right? What do you need to be looking at in a given marketing agency or business that you're looking to acquire, right? What are some of these key areas that you absolutely need to look at to get a better sense, a better grasp of the business you're looking to acquire. Okay, so just to give you a quick disclaimer here, right? My attorney said, "Hey, Paulo, you're doing an amazing amount of work there, but I want you to protect yourself and the firm. So this is not a professional advice. It's not a financial, legal, tax, or accounting advice. Okay, this is for education purposes only. Okay, the views are mine and mine alone." Do not reflect the views of my accounting firm. So two separate people here, okay? So we're gonna jump here straight into our presentation, all right? So as I said, we're gonna start with due diligence. We need to look what is due diligence, okay? That's the number one question. Due diligence essentially is the verification process, okay, to corroborate what the seller is telling us, right? So if you are not an experienced business buyer, usually the M&A process begins but when a buyer solicits a potential seller if they are looking to sell, and the seller will say something like yes. And when they say yes, I'm looking to sell, typically they sign an NDA, right? The buyer will sign an NDA that protects the confidentiality of the seller and agrees to maintain largely a non-competing agreement in the event that they do not end up buying the firm, right? Usually that NDA and solicitation is valid for 2 years. Sometimes it can be 1 year or even more than 2 years. Okay, so when that happens, right, the buyer will sign that NDA, and then the seller begins providing some material, right? So some financial information, tax returns, and so forth, right? So the way that and of course the seller makes some representation, things like, we made seller sales of this amount of money. We have clients in this and that state. We have this number of employees. We give them benefits. We give them X amount of salary. We have these and that operating expenses, right? So the due diligence process is effectively, right, that process of checking, right? So remember Ronald Reagan, who when he said trust but verify. The due diligence process is exactly that. Hey, seller, I trust what you're saying, but let us verify what you're saying. Okay. So that's what really the due diligence process allows us to accomplish, right? It gives us a methodological framework by which we can use to verify what the seller is telling us, right? We are gonna go beyond just the summarized information that the seller or the seller's broker has provided us and actually start double checking, right? So we're gonna look more into detail what that double checking looks like, right? But just a quick example here to give you a sense um, of the meaning of due diligence. When a seller tells us, for example, that I generated $1,000 $1,000 this month in sales, then in the bank statement, we better see that $1,000, right? And we better also see that there is an actual client and not, the seller or the seller's family would transfer the money to that bank account, right? And therefore, that's the $1,000. We have invoices that the seller sent to to this client, and there is a contract that actually support that transaction, right? So as you can see, it's a little bit of a process, right? And when you're buying a marketing agency, right, the due diligence is largely focused on the proof of cash and the verification of the revenue, right? So, but we're gonna look into that in a little bit here. So after we have defined the due diligence, just a quick summary here. Due diligence, in other words, is trust but verify, right? It's the verification process to support what the seller is telling us. It's also how we justify that the price we're paying for a given business, and in our case, marketing agency, is justified, right? The price we're willing to pay can actually be supported by actual factual real evidence, right? So that's really what due diligence is all about. Okay, so once we look into due diligence, what is the goal of the due diligence, right? We touched on it a little bit, but I'm gonna bring it again so that you can the more you hear it, the better it's gonna sink in and it's gonna make sense to you, right? The goal of due diligence is really to help you, okay, to help you determine whether or not, okay, whether or not the price you are about to pay for that marketing agency, for that business, is justifiable. Okay. It's to help you determine if you're actually buying what you think it's the worth of the business, or you're just purchasing a bunch of things that are not valuable, right? So that's what due diligence really helps you achieve. Okay. It helps you, again, due diligence, the main goal of due diligence is to help you verify and justify that the price you're about to pay for a given business is actually appropriate. Okay. So remember that because it's going to be very important and it's going to guide most of what you end up actually doing, right? As a business buyer, right? So again, if you have been following the lives that I'm doing recently, right? So this month of June, we started doing lives around the mergers and acquisitions. So last week, I did a live starting to address the preparation of the seller who's looking to sell their business, and how do you determine the value of a business, right? So if you haven't seen that, please go back and watch that, right? And if you have any question, if you need help from us, please reach out to me, and I'm gonna be more than happy to help you. Okay. So back here to our life today, right? I'm talking about the goal of due diligence right now. So again, the goal is to help you justify whether or not the business you're looking to buy is worth what you're planning to pay for. Okay? Okay? So that's the goal. And now let's touch on why is due diligence important. Okay? So let's just imagine that you go buy a car. Okay? You go to buy a car. You looked into the car from afar in the parking lot. You're like, I want that car, and you paid for it, and it's yours. Is that something you do? Of course not, right? You will need to test drive the car and possibly take it to the mechanics to verify whether or not the car is actually in a good shape and condition to last you enough time to recover the investment you put in, right? Unless it's a new car. And even with that, you still do some test driving, right? The same thing. Imagine looking to buy a house. You see the pictures online and you say, I love it. I'm gonna pay for it, right? That's not typically what happens. You go there, you walk into the space, you touch the walls, you check, you know, what's working, what's not working, right? To make sure that you have, excuse me, you actually have found a valuable piece of property, right? And why do we do this? Why do we do all this checking? Why do we do all this testing, right? We do them and as you will agree, because we want to make sure that what we're purchasing is actually worth what we're about to pay. Number one. And number two, we do that because we want to certify, we want to build and enhance our confidence that whatever we'll be paying, right, it's actually in working condition. It's not something broken that will end up giving us a lot of headache, right? So um, I'm gonna tell you a story, a funny story. When I was looking to buy a car when I moved in the US, I didn't have much money. And at the time, I met um, somebody who was looking to sell me their car. And because I didn't have much experience, and unfortunately, okay, I was young. I didn't know what I didn't know. I didn't even know that you know, when you're buying a car, you should be taking a mechanic, especially if it's a used car. You need to test drive it, right? You need to have some form of guarantee there, right, for a certain number of months. And I didn't do any of these. I bought the car, and in less than 3 months, right, the transmission was gone, was gone. And you know, I spent a lot of money with that car, but I loved it. I loved it. But it did cost me quite a bit. Okay. So that just to say that they are some of the hidden problems that if we did not do a proper due diligence, we would not uncover. And as a result, these unhidden problems would come back and cost us significant amount of money. Okay. If you buy a business where the employer or or the seller was misclassifying, let's say, employees as independent contractor, and as a consequence, after they sold the business and you didn't know that, the IRS or the state government comes back, right? And fine you for unpaid FICA taxes and additional interest and penalty, you're on the hook, right? Because you didn't do a proper due diligence, right? So it's such a big deal. It's so important, right? That we do proper due diligence to avoid expensive mistakes, to uncover what the seller may not be telling us. Uh, I like to think that Most people are trustworthy. They want to tell the truth. I like to see the good in humankind. But the truth is, right, there are other people who are not necessarily good-hearted, and they don't care who they're gonna be hurting, right? People like the guy who sold me the car that they knew it had problems, right? Maybe they didn't know, but after calling him a number of times, they never actually answered my calls anymore. It seems like they knew what they were doing. So, there are sellers like that who are gonna be not disclosing everything. They're not gonna be telling you where the major problem, the problems that could cost you significant amount of money are, and it's your job to really make sure, right? To really make sure that you understand where the problems are, where the challenges are, where the difficulties are. Unless it's fraudulent, okay? Unless it's something fraudulent and you can prove that the seller committed fraud. If you buy a business, a marketing agency, right? That goes south, decline significantly in value, right? The seller is not required to compensate you for that unless it was fraudulent, right? So you really want to make sure that you are doing your due diligence, right? Again, because you want to uncover what's factual, what's fictitious, things that could cost you a lot of money, things that could derail your growth plan after the acquisition, right? To make sure that you actually bought something that the evidence justifies the price you are about to pay. Okay, so far so good. I'm not seeing any questions so far, so we're gonna continue moving forward here. Okay, so the next question is, how do I go about conducting my due diligence? Okay, this is something that personally I consider to be both science and art. Okay. If you're not experienced, if you haven't done deals before, if you don't review deals as part of your work, I would strongly recommend that you bring somebody on board who can help you with that, okay? Because different type of businesses, different industry have specific challenges, have specific uh, areas of concern that somebody who's not experienced might not know about. Okay. So for example, I am not an expert in aviation. Okay. If you bring me a deal around aviation, right, I may not be the right person to underwrite a deal like that. I might not be the right person to help you with an acquisition of uh, a deal that involves aviation assets. I've done a few deals. I've done valuation for some air ambulance businesses, helicopter tour businesses, things like that, right? Private charter businesses. But it's not an area of my expertise. Maybe, I've only done 3 to 4 of these type of deals, right? In my entire professional career. So you really want to work with somebody who understand the space, right? Who is, the expert. That's what I'm trying to say. Okay, so um, how do you go about doing the due diligence in that case, right? I'm gonna share here on my screen. Okay, let me close this for a second. And go to my due diligence checklist here, right? I hope you can still see my due diligence. I have about 8 different areas of due diligence that I like to check, right? When I'm conducting my due diligence, those are the absolute areas that I absolutely want to check. And sometimes they are areas that I personally do them, but they are other areas where we have to bring another professional, like a lawyer or a management consultant that is specialized in a given industry, right? So But typically, when you are about to begin your due diligence, right, you have your team of experts that will be helping you. So the first area that we want to make sure we do a proper due diligence is around corporate documentation, right? We want to make sure that we know the seller, and the seller has the right to transfer or to sell the ownership interest, right? Because you don't want to be in a position where you're buying a business, a marketing agency that somebody else actually owns the majority stake and they're not willing to sell, right? So you gotta make sure first you get that list of all the owners, right? You got the corporate documentation, right? The articles of organizations or bylaws, any amendments done. If a marketing agency had raised money through private placement, you also want to get, the copy of these private placement memorandum, right? To make sure that they were compliant with security laws, right? And they are keeping records of the relevant information. You also might want to have access to uh to the meetings minutes, okay, so that you can verify what the management, the board have discussed, what they have talked about, what are the pressing issues, what are the key resolutions or decisions that the senior team has made. Okay, so that would usually be a really good place to begin, right? And also you want to make sure a lot of marketing agencies can run remotely, right? So you want to make sure you know the location that the employees of the agency operate from, right? They might have a headquarter. For example, I live in Illinois, Chicago. But we have even a back office team supporting us from Angola, where I am from, right? So we have an international location. So your marketing agency that you're looking to acquire might have people doing the work in other states, and that could expand the size of your due diligence and as well as the cost of your due diligence. Okay, so be mindful about the location. If they have virtual remote folks, you want to know where these people live, what they're doing, right? And so forth. The second area is around the financial due diligence, right? So in the financial due diligence, many companies don't actually have an annual report, right, written. So you'll need things like the profit and loss statement for the past 3 to 5 years, right? If they have any projections or estimates of the next year and years after that, that's even better, right? We want to get the tax returns of the last 3 to 5 years, right? If they have had any audits or any reviews, I rarely see audits being done by smaller companies that do not have outside investors, especially if the company is below $10 million in revenue. I rarely see audits being done. The most that I see is usually going to be something along the lines of a review, right? So, and by the way, a review is a technical term, right? It's a level of assurance below audit. Okay, so when I say review, it's not what a layman may be thinking about. Okay, so we want to make sure that we have this financial information, but we also want to make sure that we have an understanding of any outstanding liabilities, right? If they have line of credit, if they have a loan, a PPP loan, for example, that wasn't forgiven, an SBA loan that is still outstanding, right? We want to get these loan agreements, these loan documentations, right, to make sure that we understand, especially if part of the deal structure is gonna include, right, the new buyer to assume outstanding liabilities, right? You really want to make sure that your attorneys review all the paperwork around the loan agreements, right? So in conjunction with your accountant, right? So that's going to be very important, and you want to make sure you are running some confirmation of the loan balances, right? Some businesses may not be keeping accurate track of their loan liabilities on their balance sheet. So you might want to reach out to of course, with the permission of the seller, right? Usually what actually happens is the seller requests a letter from the lender to be sent directly to the buyer, okay? And not and it's not, the letter goes to the seller and then the seller gives it to you. To increase the reliability of that letter, it's actually better that the letter is coming first. It's coming straight from the bank to the buyer. Okay, so that's very important. If there is any off balance sheet liabilities, obligations, or financial commitment that could affect the business moving forward, right? We want to know about those, right? So we're going to ask the seller, and if they lie to us and later somebody comes knocking on the door after the change in ownership interest, uh, requesting for payment, then we know, okay, either the seller committed a fraud or they just didn't remember, and we can find a remedy, right, to pay that obligation, right, that doesn't cost us the new buyer. Okay, so after you have done that, of course, we've talked about the tax returns, right, at the federal, at the state, at the local level, right? Especially for marketing agencies that operate in several states, you really want to make sure you're reviewing their tax filing and that they are compliant in every single jurisdiction where they do business, right? Because if you buy a marketing agency that is not in compliance with tax liability and tax obligations, excuse me, and you are not aware of that, and later the tax authorities come after the company for non-compliance, you could be on the hook, right? So that's why, usually when we're working with the attorneys, right, we want to make sure that they are including a language that protects the new buyer about business decisions or economic decisions that did not take place under the new management's or the new owners oversight. Okay, so that's very, very, very important to make sure that is there. The other important item here that I just wanted to share with you quickly is around management compensation, right? So for businesses that are between 3 to 10 million dollar in revenue, right? s- Most of the time they would have, a CEO, a CFO, they would have a COO, and sometimes the CEO and COO are essentially the same person, right? So we want to make sure we get the list of the top paying employees in the firm so that we can actually do a little bit of the testing around that compensation, because it's an area where we want to make sure that we understand the cost of compensating these key people in the firm, right? If we're going to retain them, we want to know what's going to cost us, right? Especially in situations where we are expecting the seller to walk away and maybe one of the other senior management team to walk away. It's good practice to actually figure out, okay, maybe these folks weren't being paid a fair market wages. Then if we're gonna go to the market to replace these people, maybe it's gonna cost us more than what, the seller and maybe their spouse or one of their children are being paid right now. their replacement costs will be higher, and therefore reducing the profitability of the business. So it's something that you really need to be mindful about, because if you don't, right, you might end up buying a firm that initially looks so profitable, but once you start replacing the key people that are leaving, right, the fair market rate, it's going to be so high that it's going to just crush um, your profitability. So be mindful about that, and then right, make sure to review any budgets the company have, whether the budget for marketing, the budget for the sales team, the budget for software. A lot of marketing agencies rely on extensive amount of softwares, right? If you already have a marketing agency, maybe that could be an area where you can you can, get some synergetic value there, right? You don't have to repeat the same software that you use in your marketing agency and purchase another license in another for the marketing agency you're about to acquire. Okay. That would be the second area, right? And the third area that we want to look at is around employment. Okay, so I told you at the beginning that revenue is one of the key areas, right? And we're gonna look into that just in a bit here. I should have probably covered it when I was going through financial checklist, but here's the other very important area: employment, right? And why is it that employment is so important? And here's the reason: because marketing agencies are asset light businesses. They don't have extensive amount of fixed assets, right? The way they create value is by hiring people who get the job done for the clients, right? So a large chunk of operating a marketing agency is their talent, right? Human capital. So an area of major focus is our employment related due diligence, right? So number one, get all employment agreements, right? For everybody. If the business doesn't have employment agreement, for their employees, that should be a red flag, right? That should be a big red flag, especially any agreement with independent contractor, right? So I've been in situations where the owner of a business creates some form of employment or independent contractor agreement with a family member just to move money around, right? So a little, certainly questionable, right? When it lacks economic substance, right? And you need to be aware of that. If a seller is doing unethical things or trying to dodge the law just to reduce the amount of tax they are paying, right? That should, that should tell you a little bit about the type of person they are. Okay. So make sure to review both employees and independent contractors agreement, right? If there I don't really know any marketing agencies that have a union workforce. If you're buying another type of business that has a union force, right? You want to make sure you have these the copies of these union contracts, right? Uh, Oftentimes OSHA files is not applicable to these. You also want to look into the benefit plans, right? If there is any retirement plans, any contributions, any health care being paid, the percentage, right? Any transportation, any entertainment that the employer is giving to employees. You want to make sure you're reviewing all these files, right? Reviewing all these files. If the business is larger, you might want to bring in, an HR professional to actually help you go through consultant to help you go through that, right? You also want to look into the company's HR manuals and policies to make sure that everything is there. And the other thing, the last thing you want to look at around employment related item is really the employees files, right? So whether or not the company is onboarding people correctly. They have all the documentation. The people working in the company are authorized to work in the US, right? Or they are not, right? You want to make sure that you are keeping track of all these things, right? Want to make sure that you're keeping track of all these things. The other thing you want to make sure that you are reviewing is not only the onboarding files and the file of the current employees, but anybody who was laid off the last 3 years, right? Because there could be a situation where an employee left the firm and are not pleasant, or there was some discrimination, or there was some issues, and they're gonna be coming back to sue the company, right? You don't want to be hooked in that kind of situation, right? So that's very important for you to be mindful about, right? So after you have done that, we're not gonna be looking into the tangible due diligence, but gonna make sure you're reviewing the list of computers, printers that the company have. If they have an intangible asset, maybe a platform they develop for analytics, campaign management, you wanna make sure you're reviewing that, and you bet it's part of the deal, right? Any leases the company have, if they have, if fixed locations, right? You want to make sure that all that are in place, right? And then any other material obligations of contract, you also want to do your due diligence around that, right? excuse me excuse me, maybe they have some material contract, important contract, right? Especially when it comes to client contracts. You want to make sure you're reviewing clients' contracts, vendors' contracts, to make sure that what the seller is telling you about the business is actually factual, and it's what actually taking place in the company. Okay. If they have any joint venture, very very important to check around contracts, right? You want to make sure you get a sense of the insurances that the company is carrying, right? Professional liabilities contract, the coverage, the amount, whether or not is sufficient, right? If they provide health insurance for their employees, you want to make sure that uh you understand what's being covered, and the type of plan they are offering to their employees. And then once we have done that, um an area of major concern is around litigation, right? Depending on the size of the marketing agencies, you can have a limit for the type of litigation you would be interested in looking at. If you're a multi-million dollar marketing agency and looking to acquire another multi-million dollar marketing agency, maybe anything below 10,000 is not of your interest, right? Unless they in aggregate they rise to a significant balance, then that would become a problem, right? So you gotta make sure that you understand whether or not they are litigation coming to the company or rising to the company, right? Um, Outside of litigation, you also need to make sure that you are obtaining some additional operating uh, data, operating information, right? So the org chart, the job descriptions, the current and past customers list, right? Risk management procedure. Let me skip here a little bit, right? Again, around employment related item, right? The employee benefit management team. We're also looking into the application file for each employees, right? The employment contracts, right? We're looking into any overtimes, any payments, any downturn, right? Any utilization metrics and KPIs in the firm, any bonus, any benefits being paid out, and so forth, right? Um, we're making sure we have all that information around training, right? Onboarding of employees to firing them, talent development, client onboarding, and client offboarding and so forth, right? You want to make sure that you're getting all these information, right? Very, very, very much important. These checklists is such a comprehensive document that we use with our client and our team internally, right? But I'm giving you here some of the information that you absolutely need to know and you need to check, okay? If it's a big company, if they've had any press releases, any, financial analysis, management, annual reports, and so forth, right? We want to make sure that we are getting all these kind of information. Okay. I'm gonna stop sharing my screen here for a second, right? um and I want to make sure that we go back to the revenue analysis before we close here. I hope I'm gonna be able to pull these here, but if not, let me see quickly. So when it comes to revenue analysis, right, when we're doing our revenue analysis, one thing we need to absolutely keep in mind is the fact that number one, you need to get a revenue report or a client report, right? So we have here a revenue and customer analysis. Um, when we are looking into this document, when we're looking into this document, we see the client's name, the employees covering the revenue these clients are bringing, the percentage this revenue represents, the type of service they are purchasing, the state where they live in, the budget we were expecting, and some form of analysis here, right? This is something that we have created. We run customer profitability and revenue concentration analysis is a consulting service we offer. If you wanna see what is that look like, we can check on either on our page here on Facebook or LinkedIn, a live and training that we did on these, right? But the idea really is to analyze and test whether the number one, the revenue exists, the clients are real and they're not fake, right? And the amount of money that we are saying are being generated by these clients can be traced to the bank accounts, and they are contracts that support these revenues and the invoices that supports them. Okay, so we want to make sure that we have all these documentation that support these revenue, right? So if the client is saying they made $1 million in revenue from clients in a given year, we want to make sure we're testing revenue, right? Because in the service business, right, the two major areas are the revenue and compensation costs. If the revenue that I'm making an assumption that exists, and when I start running the business is not recurring, doesn't really exist, or it's less by 10, 20%, that could be a problem, especially if I'm doing an LBO acquisition, right? So we want to make sure that we are actually running through this number and making sure we are doing the proper analysis um, to do our work. Now, I want to wrap up this presentation, this live, to talk a little bit about how can we use our due diligence to build a transition plan, right? So remember, when we are doing due diligence, we are actually, looking into the business from a pragmatic and um, objective perspective, right? So when I do due diligence for accounting firm acquisition, I write extensive reports to tell me why I should or shouldn't buy a given firm, right? Most of my reports are going to be 20, 30 pages long, okay? Just to detail to me what I'm going to be buying and why should I or shouldn't be buying it. And that document also helps me to get a sense of what are the areas of opportunities, what are the areas of problems, and whether or not I can live with the problems that I find in this business. And based on my due diligence, right? And this serves for you as well. Based on your due diligence, you can actually start building up a roadmap for after the acquisition, right? You'll know, okay, after we acquire this business, we're gonna do X, Y, Z because this is one of the problems we found, and this is what we start thinking about doing to solve them. Or here's some of the opportunities we can untap into so that we can grow this company two, three, five times more, right? So this is one of the aspects of the due diligence. It's not only about finding skeletons in the closet. It's not only trying to find whether or not you are paying a fair price for the company, but it can also serve as a roadmap by which you can use to determine whether or not this company you are looking to acquire, right, fits into the bigger picture of your overall company, and you can create a plan, a game plan to grow this company to capitalize on it. Okay, so we are at the end of our presentation. Okay, and in case you'd like to work with us, I want to share my contact information here with you. Okay. You can reach out. You can reach out to us. This is. I also wrote an ebook covering seven financial mistakes that marketing agencies make that can cost them their business. If you want a free copy, just go here in this website, download it, and you'll get a copy. You can reach out to me through my personal email, lpaulo at luntadillapaulo.cpa.com, or you can text our office number, and we'll be there to help you in any ways that we can. So if you are looking to acquire a marketing agency or any other business out there, please give us a call, send us an email. Would love to help you. And if you are getting value out of these lives and webinar, please let us know. Like, leave a comment, share it with your network, and I hope to be able to continue serving you. And I don't want to forget this time. Please subscribe, whether you're following through Facebook or YouTube or LinkedIn. If you want to continue receiving these contents, okay, please subscribe. Okay, I look forward to connecting with you soon. God bless and have an amazing rest of your day. Okay, cheers.